Welcome to the Wealth Beyond Debt Show. I'm your host, Maya, and joining me today is our guest, Stephanie. This week, we're focusing on a critical topic, navigating the mortgage debt crisis. With rising mortgage rates reaching levels we haven't seen in over 2 decades and concerns about home affordability and increasing delinquencies, it's more important than ever to stay informed. So let's dive into the strategies and insights that can help you manage your mortgage debt effectively. Welcome back, everyone. Today we're diving into the whole landscape of the mortgage debt crisis and how it ties into forging a path toward financial independence.
Yeah, it's a fascinating topic, one that really touches on our personal lives, doesn't it?
Absolutely. And it's like, a journey from being chained by mortgage debt to breaking free and achieving true financial independence. It all starts with
Exactly.
understanding the aftermath of the subprime crisis.
Right. From what I gather, the crisis wasn't just a one-off event. It was shaped by so many layers, like subprime lending practices and unstable economic conditions.
Yeah, exactly. It was kind of like a domino effect. As riskier loans multiplied, housing prices skyrocketed, and then, boom, the market crashed, leaving many borrowers in a tough spot.
Yep, absolutely. And it's interesting how, in response, there have been these systematic adjustments by the Federal Reserve and mortgage lenders to stabilize the market, right?
Right, exactly. They've been working on designing mortgage products that are not only protective, but also more sustainable, ensuring that borrowers don't fall into those dangerous traps again.
I hear you. But here's my question. While these changes aim for stability, do they really reach every segment of the population, especially those still dealing with high debt-to-income ratios?
That's a fair point, and honestly, it's not a one-size-fits-all fix. Many homeowners face skyrocketing home prices in metropolitan areas, and that's creating an affordability crisis. It
Yeah,
means larger
absolutely.
loans and even greater vulnerability.
Right. And speaking of vulnerability, the lingering impact of subprime mortgages still feels like a shadow over today's lending practices.
For sure, the subprime mortgage debacle, with its high interest and unfavorable terms, really showed us how dangerous risky lending practices can be. Nowadays, although regulations are tighter, there's growing worry that, these risky practices might be creeping back.
That's concerning. It's like history repeating itself. And I guess that's why education plays such a crucial role, right?
Exactly. Education is key. Understanding mortgage rates, financial instruments, and even something as practical as how amortization schedules affect long-term debt can empower borrowers, giving them the tools they need for informed decisions.
Yep, I think so too. And that brings me to those government programs, like loan modification and refinancing options. How effective do you really think they are?
Well, they do help, but their success can vary widely. The government has put forward things like loan modification programs to ease the burden, and refinancing can lower monthly payments.
Absolutely.
Yet, many homeowners remain unaware or, frankly, find the process overwhelming.
I see what you mean. It's like having a toolbox full of resources but not knowing which tool to use when you really need it.
Exactly. And that's where financial literacy comes in. It's not only about knowing that these tools exist, but also understanding how to best apply them in your unique situation.
Absolutely.
Debt-free made easy. Transforming debt into wealth. Eliminate all debt fast. No refinancing, consolidation, or HELOCs needed. Join $2.7 billion in erased debt with our debt crushers. Your freedom awaits. Click the link below for more info.
What's really interesting to me is this idea of the Money Max account. It sounds almost revolutionary, getting rid of most of your mortgage debt in just 5 to 7 years.
Yes, and it's like a well-crafted roadmap to financial freedom. Rather than the traditional 30-year term, the Money Max account uses your available income wisely to cancel out interest faster and, yeah, build equity quickly.
Yep, exactly. But do you think it's realistic for most homeowners? I mean, not everyone can allocate extra income without sorta changing their lifestyle drastically.
That's a good critique. It really does push people to be extremely strategic with their finances. While it might seem a bit of a stretch for some, with proper financial education, many can adjust their budgeting mindset. It's
Fair enough.
about striking the right balance.
Yeah, and I guess it ties back into broader thoughts of consumer empowerment, taking control rather than being overwhelmed by debt.
Exactly. It's about moving from a reactive stance, where you're just trying to keep afloat, to a proactive approach. You learn about, let's say, interest rates, credit scores, and all those details that affect long-term debt decisions.
Absolutely. And even the government steps in to help bolster this through programs led by agencies like the Federal Housing Administration and the Department of Housing and Urban Development, right?
Right? These agencies have been crucial in facilitating access to credit and ensuring that mortgage loans are structured in a way that protects consumers. They, are working to build trust back in the lending system after all that subprime turmoil.
Yep. It's like rebuilding a bridge that was on the verge of collapsing, and now, with more sturdy materials and a strong blueprint, it's intended to last longer.
Exactly, exactly. And let's not forget how economic downturns, like the one from the COVID-19 pandemic, played into this whole mix. They've really shown us how fragile financial stability can be for many homeowners.
Definitely. Right. Because job losses and reduced incomes make it even tougher to keep up with those mortgage payments, which can push borrowers deeper into debt.
Spot on. It creates this feedback loop where foreclosures can further depress home values, making it even harder for borrowers to recover financially.
Yep, that's the crux of it. And alongside that, the link between student loan debt and mortgage challenges complicates the picture even more, especially for younger generations.
Yes, indeed. Today's young professionals are burdened with hefty student loans, which makes saving for a down payment nearly impossible in many cases. It's a double-edged sword, really.
That's so true. So, in a way, it's not just about the mortgage crisis alone, but a whole compounding cycle of debt that's affecting the ability to own a home.
Absolutely, it's all interlinked. We see subprime lending, rising home prices, economic downturns, and even student loans, all feeding into this cycle.
Yep, exactly. Now, one thing that stands out to me is that, despite all of this, there's a strong emphasis on empowerment through knowledge.
Exactly. With the right financial education and strategic tools like the Money Max account, homeowners can potentially eliminate their mortgage debt in considerably less time than they ever imagined.
Indeed. It almost reminds me of a personal fitness plan, like training your finances to get into shape rather than letting them go out of control.
Yeah, it's like training. You have to work hard on your financial fitness, just like you would for a marathon.
Right, absolutely. I'm curious, though, do you think that the broader financial system is doing enough to promote such financial literacy, or is there still a huge gap?
That's a great question. I'd say there's progress, but there's still a significant gap. Education remains a vital tool, and while some institutions are stepping up, more comprehensive efforts would benefit a larger segment of borrowers.
That's a valid point. And with collaborative efforts between policymakers, educators, and financial institutions, perhaps we can build a more resilient framework for the future.
Exactly, it's all about building that synergy. From smarter lending practices to informed consumer decisions, paving the road to true financial freedom.
Yep, exactly. Well, it looks like, despite the complexity, there's a clear pathway emerging from all this crisis, a path that leads to empowerment, stability, and eventually, independence.
Absolutely. And remember, it all comes down to being proactive, learning continuously, and utilizing the right strategies. The future isn't set in stone. It's something we can shape through informed choices.
Yeah, absolutely. Thanks for such an insightful conversation. It's both a cautionary tale and a call to action for anyone dealing with mortgage debt or even just thinking about home ownership.
Thanks to you as well. Stay tuned for more discussions on navigating financial challenges. And remember, each step toward education is a step toward freedom.
Right on.
Thank you so much, Stephanie, for joining us today and sharing your valuable insights on navigating the mortgage debt crisis. It's always a pleasure to have you on the show. And to our wonderful audience of the Wealth Beyond Debt show, thank you for tuning in. Your support means the world to us. If you found today's episode helpful, please take a moment to like and share it. Together, we can help more people on their journey to financial freedom. We'd also love to hear from you, so please leave a comment with any topics you'd like us to cover in future episodes. Until next time, keep striving for your financial goals, and we'll see you again on the Wealth Beyond Debt show.
Debt-free made easy. Transforming debt into wealth. Eliminate all debt fast. No refinancing, consolidation, or HELOCs needed. Join $2.7 billion in erased debt with our debt crushers. Your freedom awaits. Click the link below for more info.